And now to weigh in on all these developments and their implications on the Philippine economy. Joining us this morning, economist Cristina Ulang. She is the research head over at Metro Pacific Investments Corporation. Joining us now via Zoom. Good morning and welcome to Money Talks.
Hi. Good morning, Sean.
Yes.
Happy to be here.
Yes.
From First Metro Investment.
First Metro Investments. Okay, I stand corrected. But Cristina, a lot markets are rejoicing, after that federal appeals court temporarily put a halt on Trump's sweeping Liberation Day tariffs. Markets definitely reacting to that broadly on the positive. But are you still seeing some uncertainties, some risks? Because they're saying there's still ways around this federal bloc.
Mm-hmm. And of course, we know Mr. Trump, he is the Mr. Uncertainty Factor. He's highest when it comes to the back and forth and the flipping back and forth. And so markets are going to be positioning again for a likely escalation. But of course, he's going to fight it out. We know his personality. He is a fighter. And I think there will be appeals, and this is going to be a long, protracted battle. And if he doesn't get his way, I think there are other ways to do it, to punish the trade partners that are seen to be geopolitically enemies like China and all of those even allies. And I think he can do it via quota restrictions, non-tariff barriers, permitting, and then this very tough criteria, screening of imported vegetables and all of those goods coming from China. I think there are a lot of ways to do it, and I think this is going to be the source of volatility second half of this year. It's a never-ending challenge for all risk assets. That's why the haven assets are the one gaining because of the uncertainty, high uncertainty policy and trade.
That's right. The U.S. also, they've got a growing deficit, a growing debt. They got that ratings downgrade last week. Back here in the Philippines, how should we position given these developments across the pond?
Mm-hmm. Of course, there is also interest. We can see foreign interest trickling in, foreign funds getting into the Philippine equities market. So the Philippine equities markets is not to be missed. It's worth positioning because the valuation argument is there. 10 times PE, very cheap compared to the emerging markets. And of course, the growth factor is there. The IMF has lowered our GDP, but it's still in a very respectable, decent range of like 5.6%. And government, I think, is going to do everything monetary policy-wise and fiscal-wise to support the economy against the growth shock. And I think our demographics also favors the aggregate demand expansion. So I think we will be seeing growth still. Second quarter, we're very bullish about second quarter because the impact of the election spending is going to be shown in the numbers. And also the inflation picture is easing. We have heard the increase in the OPEC oil supply, 1.5 million, maybe it will be announced this week, and that's going to depress global oil prices. This is going to help our inflation, which is now at the latest was 1.9% for April. So if you're going to look at the inflation last year, it's 3.9% for the month of May. It may easily have a base effect on the number. So we can even beat the 1.5 area, 1.5% area of inflation for May, maybe better than 1.5 or around 1.5. And that's going to signal to the BSP, this is the time to cut in its next meeting on June 19.
Okay, Cristina, what I heard from that answer in your overview of the broad macro economy is that you are very bullish over at First Metro Investments about GDP. Please tell me, let's parse through that, because in the first quarter, 5.4%, that missed the broad forecast of 5.7%. So what's the difference between the first quarter and the second quarter? Is it that election push?
Mhm. Of course, our first quarter was like 5.4, no, first quarter GDP, which was way below the historical average of 7.1% first quarter in the past election years. So it's really way below that. And what we're seeing is inflation was high, 2.9% beginning of the year. And the market is battling with very weak peso, 58.12 peso at the start of the year. But what we've seen is a reversal of all of these things. Inflation has come down to 1.9% of April. Sorry, 1.2, 1.3% April, very low. And then our core inflation has also gone down to 2.4 from 3.5 last year, first January to April. GDP deflators also 2.1% January to April of this year versus last year. So prices are rising but very slowly, and the food inflation is also rise, especially in negative territory. So that's one factor, and that's gonna boost consumer spending and consumer confidence. Our unemployment 3.8%, and the forecast for our full year unemployment is just going to be like 3.9% full year, and until next year 3.8% is the forecast, and that's very good in terms of the spending aggregate demand. And then of course we have this downside coming from the 1 month freeze on government disbursement infrastructure, but that's going to be offset by the fact that our factory data, if you're going to look at our factory data, 53, we are at the expansion level of 53 based on the IHS market for the month of April. And we have also, of course, the election spending and all of this improvement in the peso. The peso is up like 2%, 2.4% year to date. So all of these are feeding into the consumer confidence, the ability to spend, the confidence to acquire more and not just be confined with the essential. So we want consumer spending, seeing it to go into these discretionary items also. And I think in the second half, we will see more of government policy support in terms of government spending and also policy cutting by the BSP.
All right. You already led me to my next question. I guess you can guess that would be, where do you see the interest rates at the end of the year? Do you foresee two more cuts like most analysts are seeing?
Mm-hmm. Well, you know, the BSP will have four more meetings. One in June 19, and then August, October, December. And there are and the BSP governor has signaled that they may cut more rate cuts are on the table. They may do like two more, 225 basis point. But of course, a major consideration would be the Fed. And this yield differential between the US Fed and the BSP key rate, like they have managed to keep that differential at 125 basis points, meaning we should be higher. Our BSP key rate should be higher than the Fed by 125, but that has come down. And the forecast is that it could narrow to like 100 basis points and even 75 basis points, which means the BSP is confident that even with the rate cutting, that the peso will remain stable. As we are seeing it now, it's appreciating, and that really is a good leeway for them to stimulate the economy to do more rate cut and like do it more independently of the Fed, because the Fed is not going to cut this year. Maybe some are saying it's just one by December, but next year it could be more, because the hard data on unemployment is gonna come out, maybe show some weakness on the US economic trajectory activity, and that's gonna force the Fed to do something about it, do the rate cutting. So it might be like pushed to 2026. But the BSP is faced with the fact that the Philippine GDP is way below the historical and even below the target. 6% is the target. Actually, government is already in the midst of revising the growth targets, which is very important in as far as this one particular factor is concerned, also affecting also affecting the interest rates, which is our budget deficit. Very, very critical is our budget deficit, and how is that going to be managed? Because our debt is rising, our interest payments is already 17% of our revenues. So we need to have that fiscal space very well managed for debt sustainability and fiscal sustainability. All about spending, how much to spend, how much more to tax, so that we can shore up this economy and then be able to respond to this growth shock coming from the tariffs.
That's right. Well, we'll see if the government hits their target of debt to GDP target by the end of the year at 60.4%. But for now, we'll have to leave it there. Thank you so much for sharing your insights with us this morning. Cristina Ulang of First Metro Investment Corporation.